Big opportunities in life have to be seized. We don't do very many things, but when we get the chance to do something that's right and big, we've got to do it. And even to do it in a small scale is just as big a mistake almost as not doing it at all.
If you had the opportunity to do one thing today that will change the course of your life, what would it be? Seizing big opportunities in life is crucial for achieving financial freedom and realizing your dreams. The power of dividends is indeed remarkable, with S&P 500 companies paying out billions in dividends each month. Not convincing enough? What does the Oracle of Omaha have to say about this?
Well, the answer is I do believe in dividends in a great many situations, including many of the ones companies in which we own stock.
Warren Buffett, renowned for his investment success, has long been an advocate of dividends as a wealth-building tool. He acknowledges their importance in generating a steady income stream and has utilized them effectively in his own investment strategy over the years. As he famously stated, "I do believe in dividends in a great many situations, including many of the ones that companies in which we own stock." Historically, dividends have contributed significantly to the stock market's total return, making them an essential tool for wealth building. With the right strategies and investments, it's possible to secure a monthly payout of $3,800 or more through dividends. By leveraging the power of compounding, diversification, and smart investment decisions, individuals can create a reliable stream of passive income that covers their expenses and allows them to live the life they've always desired. There are numerous avenues to explore for generating consistent income from dividends, and it could be through dividend-paying stocks, real estate investment trusts, REITs, or dividend-focused exchange-traded funds, ETFs. By taking advantage of these opportunities and staying disciplined in their approach, individuals can turn their financial aspirations into reality and enjoy the peace of mind that comes with financial security. What's more assuring is embarking on a journey guided by the wisdom of Warren Buffett, especially when the goal is to achieve financial freedom through dividends. As Buffett famously said, "If you don't find a way to make money while you sleep, you will work until you die." Dividends offer a way to make money passively, even while you're asleep, making them a crucial component of any financial independence strategy. When you invest in a company's stock, you're essentially buying a piece of that company. As the company generates profits, it has several options for what to do with those earnings. One option is to reinvest them back into the business for growth, while another option is to distribute a portion of those profits to shareholders in the form of dividends. Dividends represent a tangible return on your investment, providing a steady stream of income without requiring you to sell your shares. This passive income can be incredibly valuable, especially for those seeking financial freedom and independence from traditional employment. By understanding the power of dividends and incorporating them into your investment strategy, you can work towards achieving your goal of securing a monthly payout of $3,800 or more, and ultimately enjoying the financial peace of mind that comes with it. Dividends are indeed a crucial aspect of investing, providing investors with a share of the company's profits. These payouts are typically distributed regularly, often quarterly, although some companies may opt for monthly or annual dividends. While cash dividends are the most common form, companies may also offer stock dividends or dividend reinvestment plans, providing investors with additional shares of stock instead. Something else you should take note of is that Buffett emphasizes the significance of building a well-diversified portfolio. Diversification serves as protection against ignorance, mitigating risk by spreading investments across different assets and industries. Spread your investments across different sectors and industries to reduce risk. Avoid putting all your eggs in one basket, as a well-diversified portfolio is more resilient to market fluctuations. However, Buffett also emphasizes the importance of retaining earnings within companies when they can be used efficiently for growth. This approach ensures that companies maximize their potential while also providing investors with a return on their investment through dividends.
We had more reason to retain all of our earnings. If See's Candy were a standalone company, we would simply pay out a lot of the earnings, practically all of the earnings in dividends, just like we do now, except it goes to Berkshire. we like the companies in which we have investments to pay to us the money they can't use efficiently in their own business. In some cases, that's 100% of what they earn. In some cases, it's 0% of the earn. We own some stocks that don't pay any dividends.
Building a powerful dividend portfolio, as advocated by Warren Buffett, involves several key components. Firstly, selecting dividend-paying stocks is crucial. Look for companies with a history of stable or increasing dividend payments, particularly in sectors like consumer staples, utilities, and healthcare. Conduct thorough research to assess the company's financial health, competitive advantage, and ability to sustain dividend payments through cash flow generation. Maintaining a long-term perspective is also crucial. Just as Buffett emphasizes, approach investment decisions with a long-term mindset. Each investment should be carefully considered as if you have a limited number of opportunities. Make informed and substantial decisions that align with your long-term financial goals. Assessing risk is another crucial aspect of dividend investing, in line with Buffett's philosophy. Avoiding companies with excessive debt or a history of frequent dividend cuts helps protect the stability of your portfolio. Instead, focus on companies with strong balance sheets and a proven ability to withstand economic downturns. Regular monitoring and adjustments are essential to ensure your portfolio remains aligned with your goals. Economic conditions and company performance can change, so it's important to review your investments periodically and make necessary adjustments. By following these principles and strategies, you can build a robust dividend portfolio capable of providing a steady stream of income to support your financial goals. And with careful planning and diligence, you can work towards achieving your target monthly dividend income of $3,800. Investing in blue-chip dividend stocks is indeed a cornerstone of many successful investment strategies. These companies, renowned for their stability and consistent performance, offer investors a reliable source of income through regular dividend payments. Their resilience during economic downturns and ability to weather market volatility make them a preferred choice for income-oriented investors seeking financial security. Incorporating blue-chip dividend stocks into your investment strategy is a prudent step towards building a diversified portfolio that generates consistent returns and helps you realize your long-term financial objectives. It's a strategy that aligns perfectly with Buffett's approach to investing and has stood the test of time as a reliable pathway to wealth accumulation and financial security. By seeking out companies that prioritize reinvesting their earnings into growth initiatives while simultaneously increasing dividends, investors can tap into the compounding power of dividend growth. As these companies continue to expand and boost their dividends year after year, the income generated from these investments grows not only in absolute terms, but also as a percentage of the initial investment. While dividend growth stocks may not offer the highest initial yields, their potential to generate substantial income over the long term is unmatched. This compounding effect can significantly accelerate an investor's journey to financial independence, aligning perfectly with Buffett's emphasis on the importance of patience and a long-term perspective in investing. So, consider incorporating some of these promising dividend growth stocks into your investment portfolio today. By doing so, you're not just investing in stocks, you're investing in your financial future and paving the way towards achieving the lifestyle of your dreams, funded by dividends. Covered call exchange-traded funds, ETFs, offer investors an innovative way to enhance their dividend income strategy while incorporating Warren Buffett's timeless advice on patience and the stock market's transfer of wealth from the active to the patient. These ETFs combine stocks and options, creating a unique investment vehicle that generates additional income for investors through the sale of call options on dividend-paying stocks held within the ETF's portfolio. Here's how it works. Covered call ETFs start by assembling a portfolio of high-quality dividend-paying stocks, forming the core holdings of the fund. Simultaneously, the ETF sells call options on these stocks. A call option grants the buyer the right, but not the obligation, to buy shares of the underlying stock at a predetermined price, the strike price, within a specified time frame. By selling these call options, the ETF collects premiums from buyers, which are then distributed to investors in the form of dividends. While selling call options generates additional income, it also imposes a cap on the potential upside of the stocks in the portfolio. If the stock price exceeds the strike price of the call option, the ETF may have to sell the shares at the agreed-upon price, potentially missing out on further gains. Covered call ETFs are designed for investors seeking a balance between income generation and potential capital appreciation. They provide a steady stream of income through dividends while allowing investors to participate in the stock market's upside, albeit with some limitations. To calculate how much you need to invest to generate $3,800 per month from covered call ETFs with a 12% annual yield, follow these steps. 1. Determine the annual income required. $3,800 per month times 12 months equals $45,600 per year. 2. Divide the annual income required by the yield percentage to determine the total investment needed. $45,600 divided by 0.12 equals $380,000. So, to achieve a monthly income of $3,800 from covered call ETFs with a 12% annual yield, you would need to invest approximately $380,000. Comparatively, let's say you're using traditional dividend investing where the average yield is around 3%. $3,800 divided by 0.03 divided by 12 equals $1,266,666.67. In this case, to achieve the same monthly income of $3,800 using traditional dividend investing with a 3% yield, you would need to invest approximately $1,266,667. This comparison highlights the potential advantage of covered call ETFs in generating higher income with a smaller initial investment compared to traditional dividend investing. However, it's essential to consider the trade-offs, including potential limitations on capital appreciation and increased complexity associated with options trading. To achieve a monthly income of $3,800, the total investment needed in covered call ETFs with a 12% yield amounts to $380,000. Comparing this to the conventional dividend investing method, which typically yields around 3%, reveals a stark contrast in investment requirements. For the traditional dividend approach with an annual income requirement of $45,600, the total investment needed would be $1,520,000 based on a 3% yield. This substantial disparity illustrates the advantage of covered call ETFs with their higher yield potential. Choosing covered call ETFs over traditional dividend stocks offers a more appealing prospect for investors aiming to generate income with a smaller initial investment. However, it's crucial to weigh the associated risks, as covered call ETFs may limit capital appreciation compared to traditional stocks. It would be wise to consult a financial advisor who can provide tailored guidance aligned with your specific needs and risk tolerance, whether opting for the robust yield of covered call ETFs or the stability of traditional dividend stocks. Consider your next actions toward living off dividends a marathon, not a sprint. Your chosen path should align closely with your financial aspirations, risk profile, and investment horizon. So what do you think about a $3,800 dividend yield? An impossible task or a game changer? Share your thoughts in the comments below, and don't forget to like, share, and subscribe to this channel for more videos like this.